Should non-U.S. subscribers be using the quads to guide sector allocations in their home markets? For example, if the U.S. is in Quad 4, but my home country is Quad 1, should I belong the domestic tech sector, or should I just belong the broad equity index?
What country is he in?
He's in Australia. I'm not sure if Australia's in Quad 1. I think he's just kind of talking hypothetical.
Yeah, in Quad 1 you buy stocks. You want to buy growth stocks. You buy, in Quad 1 actually you buy value stocks. In many cases outperforms. That's the one quad where value outperforms growth. Why? Because generally, go to the quad map on I'll just draw it. Forget it. So you got your four quad map. Let's get my girlfriend out here this morning for a little action. So when you're in Quad 4, you're generally at the bottom of an economic cycle. Okay, deflation is there. When you go towards Quad 1, basically, end of the cycle becomes the beginning of the new cycle. Now, imagine that the Fed didn't interrupt in all these different things, and all these people on the buy side didn't want their books to be protected. Their own personal wealth. They want to socialize losses, capitalize their big time gains. But imagine that the cycle just went like this. See that? It goes counterclockwise. So again, the economy comes out of a depression or deflation, starts to actually expand into any kind of a recovery. It doesn't have to be the letter of the alphabet. And then it overheats. It gets too hot in the kitchen, Quad 2. Now interest rates are going up. You're short gold, you're short treasuries. Then the economy starts to stagflate, deflate. And that would be a cycle if there was no central planning of markets, God forbid. So the highest returns for value, because the lowest returns on value are when you go basically from stagflation to deflation. That's why value has sucked the frickin' tailpipe. Put your lips right around, I don't know, a 1989 Jeep tailpipe and like it. That's what being long value's been, during Quad 3. So in Quad 3, what's happening is that people are like, oh, I'm going to crowd into the growth that I can find. And the value's bloody awful, like financials. And then the financials finally bottom, and then you go here. Now, some people think that they got the super bottom price in financials in May. Maybe they did. But they also just didn't generate alpha from June until today, being long financials versus the alternative, like something like utilities. So again, here to here, you buy value. Here to here, you have value or growth. Here to here, growth's better than value. Here to here, get the F out of value. That's what, using any country that you're in, the equity market, I would look for the factor exposures, those attributes, because not every market is obviously like the USA, where 5 stocks equal a massive component of the index. But again, you get the point.